It's about that time as we hit 4 p.m. here on the East Coast, and you're listening to the closing bell of the New York Stock Exchange. And there's big smiles for a reason. Look at all this green. A real positive day for the stock market, positive week as well. For the day, the Dow Jones, as you see there, is up almost 390 points.
That's right. The S&P 500 and NASDAQ also saw gains, each ending the day up roughly 1.5%. Joining us now is Mark Lehmann. He is the CEO at JMP Securities, a Citizens company. Welcome. Thanks very much for being with us, Mark. So we saw all that green, as Errol pointed out. What was driving the markets today?
Well, I think it was a little bit of a relief on the bond market. We've been so focused on rates and how they've come back a little, backed up, if you will, to that 4% level. And we've kind of gone slightly below that. And yet earnings continue to drive better profitability for some of our larger companies. And I think it was a little bit of a relief rally, but it also was a fundamental understanding that I think earnings have continued to be good for some of the companies that really adapted in 2022 and are showing those earnings into 2023.
Help us understand who's doing well, who isn't, because I understand tech stocks had a very strong week, and a lot of the headlines recently have been about layoffs among tech companies, and that's not necessarily representative of the entire economy. But in your view, what stands out about the current state of tech right now?
Well, it is absolutely the right question, because I think we saw in 2021, if you were a tech company, and that's a very large universe, you were doing very well, irrespective of kind of what sector you were in. And in 2022 was the exact opposite. And what we've seen at the beginning of this year is we've been company specific. And as I like to say, it's become a market of stocks as opposed to a stock market. So let's talk about this week. We saw great earnings out of Salesforce. And you know that company's been going through some changes at the board level. But the results were really good. And I think the stock acted similarly well. My analyst, Pat Walravens, has a $250 price target. But their top line growth, their margin profile has improved. And it's similar to what you just said. Some of them are focusing on layoffs. Sort of the grow at all cost mantra from the low rate environment of the past is no longer the mantra. And profitability is starting to take off. And profitability chart changes multiples, and multiples drive stocks.
Well, earlier today, the Institute for Supply Management released a survey showing that the U.S. services sector grew steadily in February. Mark, what's made the economy and the market so resilient?
I think there's this overarching lack of supply of talent. And I think we've read all about the number of workers who have left the workforce, and yet there's still an economy that is still growing, albeit at a slower rate than it was during the pandemic, and some of the fears of what would happen if we had a recession. And I think that supply of talent is still what is really driving the marketplace, and people are still looking for the best and brightest. And although, like you said, talent has been pulled back a little bit at the biggest tech companies, those are new projects and some of the new things that companies were going into. But existing parts of the economy continue to grow nicely. And so there is still a labor shortage for the best and brightest.
Really interesting to hear about that dynamic, especially because, as Errol pointed out, you know, we had been hearing, and what had been making the headlines were those layoffs in the tech sector that seem to be sort of continuing. Mark Lehmann, Mark, thanks so much for sharing your expertise and insight with us.
Thank you, Mark.